Have you ever wondered where smart investors are putting their money in 2026? The world is changing faster than ever. Artificial intelligence is transforming industries, interest rates remain uncertain, inflation continues to affect purchasing power, and new opportunities are appearing almost every month. If you simply leave your money sitting in a regular saving account, inflation could slowly reduce its real value over time. That's why choosing the right investment has become more important than ever. Financial institutions continue to emphasize diversification rather than relying on a single asset class. In today's video, we are counting down the 10 best investments for 2026, from safe beginner friendly options to higher growth opportunities. Whether you are starting with $100 or $1 lakh, this list will help you understand where your money could work harder for you. Let's get started. On number 10, starting our list is one of the safest place to keep your money. A high yield saving account will not make you rich overnight, but it is perfect for emergency funds and short term goals. Many banks continue offering better interest rates than traditional saving accounts, allowing your cash to earn while remaining easily accessible. These accounts are ideal for money you might need within the next year or two. Think of this as your financial safety net. On number 9, government bonds remain one of the safest investments available. When you buy a government bond, you are essentially lending money to the government in exchange for regular interest payments. They are especially attractive during periods of economic uncertainty because they usually carry much lower risk than stocks. If your goal is preserving wealth while earning predictable income, government bonds deserve serious consideration. On number 8, gold has protected wealth for thousands of years. Whether inflation rises or market become volatile, investors often turn to gold as a safe haven asset. While gold does not generate dividends or interest, it has historically helped preserve purchasing power during uncertain economic periods. Many experts still recommend holding a small portion of your portfolio in precious metals for diversification. On number 7, real estate continues to be one of the world's favorite long term investments. Whether it is rental properties, commercial buildings, or real estate investment trust, also known as REITs. Property can provide both appreciation and passive income. Although buying physical property requires significant capital, REITs allow beginners to invest in real estate through the stock market with much smaller amounts. Remember that location, local demand, and financing cost play a major role in returns. On number 6, imagine getting paid simply for owning shares. That is exactly what dividend investing offers. Companies that constantly pay dividends often have stable businesses and long track records of profitability. Besides potential stock price appreciation, investors receive regular cash payments that can be reinvested to compound wealth over time. Many long term investors rely on dividend stocks to generate passive income. On number 5, one of the Warren Buffett's favorite recommendations for beginners in investing in low cost index funds. Instead of trying to pick winning companies, index funds let you own hundreds or even thousands of businesses through a single investment. This reduces risk while providing exposure to overall market growth. Historically, diversified stock indexes have delivered solid long term returns despite short term volatility. On number 4, artificial intelligence is no longer the future, it is happening right now. From healthcare and education to finance and manufacturing, AI is transforming nearly every industry. Many analysts expect continued investment in AI infrastructure, chips, software, cloud computing, and automation throughout 2026. Of course, individual AI stocks can be volatile, so many investors prefer diversified technology, ETFs, or funds instead of betting on just one company. On number 3, ETFs combine many of the benefits of stock and mutual funds. They offer instant diversification, low management fees, and can be bought or sold throughout the trading day. Whether you are interested in technology, healthcare, renewable energy, global markets, or dividends, there are likely an ETF designed for the sector. For beginners who want simplicity without sacrificing diversification, ETFs remain one of the smartest investment choices. On number two, here's an investment many people overlook: investing in yourself. Learning high income skills like programming, artificial intelligence, digital marketing, video editing, cybersecurity, sales, or entrepreneurship can dramatically increase your earning potential. Unlike stocks or real estate, no market crash can take away valuable skills you have developed. For many people, the highest return they will ever receive comes from improving their own knowledge and abilities. On number one is investment isn't a single asset, it is diversification. Professional investors rarely put all their money into one place. Instead, they spread investments across stocks, bonds, cash, real estate, precious metals, and other assets to reduce overall risk. Diversification will not eliminate losses, but it can make your portfolio more resilient during market swings. Many investment firms continue to recommend balanced portfolios rather than chasing the latest trend. Remember, the goal is not finding the one perfect investment, it is building a portfolio that matches your goal, time, horizon, and risk tolerance. Those were the 10 best investments for 2026. Which investment do you think has the biggest potential this year? Let me know in the comments below. If you enjoyed this video, don't forget to like, subscribe, and turn on notification bell so you never miss another top 10 countdown. Thanks for watching, and I will see you in the next video.